The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday at this time. And let me just turn down the volume over there. I didn't realize it was on. Okay, good. Now we don't get an echo. I did Larry Pesavento's program today at 9. I'll try to do it again tomorrow and hopefully Wednesday. I went through a number of these chart patterns. Let me just tell you that the weekly chart is the most important right now of the E-mini. A single leg A up 17.3%. That is, it's never been done before. And I'm sorry, 17.3% might have been done, but not the price movement. 1794 to 2105, was that? 2105.25. That is an extraordinary point move. And that has not been done before. Certainly not, I'm talking about in the space of time, from the low that was made in February, mid-February. Yeah, spectacular move. So you should expect some digestion. Now, if you're looking at the MACD, look how strong it is on the weekly. Look at the stochastic at 91%. Now, it turns out that the S&P cash has made a peak B at 16% gain. 1810, a lower low to 2111. We're talking about 100 points, 101 points. That is really spectacular. So wait, 200, what am I talking about? Oh, whoa, 300, 1810 to 21. There's 300 points. These are huge moves. So looking at the Dow, let me just say the Dow is up 6.25 at 2,071. The S&P is up that amount. The Dow is at 17,836, up 63. 17,008, I believe that should be 85. Yeah, somewhere around 17,880s is really strong 9-period exponential moving average distance. I just think this is a bounce, a very important bounce. What is very unusual, you see this W formation here? The Dow May high of 18,351 back in the 29th at the end of May, coming all the way down to the August low of 15,370, bouncing to 17,977, a big B minus. Why? Because it plunged all the way back down to the 15,450 level in January, then February retested slightly higher. So you've got this dashed rising trend line. And that took you to a higher high than before. But look at that W formation. Now the W formation is taking a breather, but I contend that in order to sustain a W formation, you cannot see the Dow breaking below 17,300 and holding for more than 2-3 weeks if it's going to do that. Why? Because that would change the pattern considerably. And let me just move this away. It's the 120-minute chart. I want to show you the monthly. Look, the monthly, this so far is a spectacular pattern. It is really bullish. But on the short term, we have a sell signal to sell mode. What does that mean? That means it's a description. It doesn't say, oh, because you're in a sell mode, now you can go down to, whatever. That's not the issue. The issue is that there was a peak D in the Chapman wave. There was a failure with the stochastic and the MACD on that bounce from the low of trough A at 17,855 to the 18,084 level. So the high that remains is the high of 18,167. And that's going to be very important at this particular point. Why? A break above that high starts a leg D to the upside in the weekly chart, but that improves the monthly chart considerably. So I'm looking at this and I'm saying, we have short positions within the context of the formations that have unfolded over the this first quarter. It is imperative to keep in mind that the Dow actually in a way is leading The S&P's next. The QQQ series, which had a spectacular move, going from 84.74 in the PowerShare QQQ Trust series to 115.75. I never did work out the percentage on that. It's a 20, 30, 30 from there. Oh my goodness, that's about a 38%, I think, increase. And if that's the case, I mean, if we are looking at an increase that is so powerful, I'm just going to go right now to my percentage calculator. I want to get that right, because under any circumstances, that is not just an amazing rally, but it is forming in the monthly chart the kind of pattern that says now we can look at the levels in a much clearer way, because if there is any, if I can get this back again, if there is any break to the downside of the 100 to 100 support level, we might see a rotation here, and that's really the point that I'm trying to get to, that the commodities have a little bit of a pullback now. They're getting real close to some kind of a pullback, maybe a couple of weeks, a smallish percentage. And that's going to essentially say to us that in the context of major moves, you might get what we've seen from July, the summer of 2010, the rotational corrections. Yeah, 36.9 is the QQQ series, and maybe the Qs are ready for a plus 36.9, 37%. That is incredible in such a short time. You might see a rotation that says the NASDAQ key major stocks, the top 6 or 10, could have a breather. I went through, so many of the NASDAQ, the IBD 50 stocks. Not all of them are NASDAQ, but most of them are. Over the weekend, there are a lot of stocks that have done fantastically and are now at a point where it would not be unreasonable to expect that they digest the big gains. But suddenly there are a bunch of stocks that I'm looking at that are continuing to show strength, didn't pull back last week, and others that have begun a really nice rotation, and they might be part of the commodity. So let's just run numbers. I think that's the best thing right now. You've got the Dow up 76 at 17,849. You've got the S&P up 8 at 2073. You got the comp index up 6.5 at 4782. See, it's lagging. This is what I'm talking about. But at the same time, you've got gold, which had a spectacular early morning rally. Now only I'm saying up 5 at 1295. Let me just show you something very interesting. One of the reasons why, for my opening call subscribers, we went into the gold. We were already in gold and commodities in one particular ETN. We added to that by going into gold itself, a trust, gold trust, last week. It's had a spectacular quick move to the upside. Now it's getting into, and I discussed this in Larry's show, but I'll do it again because some of you might have not seen the charts. So you see this green dashed line, a break in gold above, this is a continuous contract, it's a 1296 up 630. A break in gold above 1320, and not impossible, today's high was already 1306, would say that it's a breakout. But this area here, which I call the Chapman wave inside track repellent zone, says that every time it's got into this area.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I'm going to say, give it a worst case basis, 44.50 to 43.80 is what you can expect. I actually think if there is a pullback in crude oil because the dollar bounces strongly, we'll talk about that in a minute, I wouldn't be surprised if crude oil actually comes all the way back to the 43 to 42 area. Could even test 42.50, the 9-period moving average in the weekly. That's the way I'm looking at it. Now, let me just quickly do this. I've got the, there you are, the dollar. The dollar down 31. Let me just update. Yeah, 93.12. Oh, 93.12. That's a big move. It's only down. Oh, no, wrong. That was Apple. Isn't that funny? I was looking and saying it's 92.67, down 37. Yeah, I'm close there. So the dollar has just today to get above. I had spoken about this in Larry's show. It has to get to 93.64 or close above 93. It has to close at or above 93.63 today. If it does it tomorrow, it's too late. It says that the downside is still in action. But if it does it today, I don't know what's going to do it. That means gold's going to have to drop about 15 to 20 points between now and the end of the day. But that's the technique that I use, that H pattern. But as it stands right now, you've got a huge H pattern in the weekly. You've got the same huge pattern that I was talking about for a long time in this double U cup formation. And that makes the low of 92.62 made in August of 2015 really important, because if you close decisively below that, you could in fact extend the decline 1-to-1 between that 100.51 sneaking 11 cents or 9 cents, was it, above the previous high of 100.39. That kind of failure with a stochastic MACD suggests that there is going to be more weakness in the dollar. Now, what have I left out? EUR, USD, I did that earlier. I'm calling it a leg E up now, thinking that there could be a bit of a pullback rather than A. A says you're going to go all the way to D, and it's very bullish. I'm looking at this and I'm saying it is bullish, but I don't think it's bullish enough to start a new move right now. I think we need to pull back a little bit, and the leg D in the euro-dollar currency pair suggests to me that we could get a bit of a pullback, but the MACD and stochastic and the weekly are really strong. Now, this leads me to, I want to just jump over to the IYT. See, that's a failure pattern. Leg C went to a peak C underneath the no. 145.85, 146. So that was a G. So this is what I'm giving you in the G/C, in the IYT, the iShares Transportation Average. So that's, I talk about the Chapman Wave. There are the Chapman Wave resistance area. I call it the inside track repellent zone. Look how the price has not been able to close above the green line, and yet it keeps being contained within this little narrow track right there. That's the inside track. Chapman Wave inside track. The reason why it's green is you start leg D up very sharply above 146.07. All of a sudden, you've got something that's very different. And that suggests the next level of resistance is 151.02. We'll go one step at a time. Right now, consolidating, that's what I think is happening. And I wouldn't be surprised if this H pattern pulls back from 142.04 now up 97 cents to try to test the 139's important support. That's the IYT. IYR, nice strong candle today. This is acting much better. We're going to short that. We tried to short that. We had a small short. We took a little bit of I think we actually took a gain. What did we do? Whatever it is, it was real tiny because I kept it so tight. I just can't remember. I can't even find it now. You know what? I don't have it in front of me. But it was very, very tight. 77.09 we shorted, and I think it dropped, and then we lowered this buy stop. I just can't see it right now. But it is, in fact, acting very nicely here. And that's saying to me we've got to keep our eye on this whole interest rate thing. The TLT, why? Because if the TLT, let me show you. If this market continues declining, and the TLT, instead of breaking key support at 127, bounces again to 131. It's at 128.32, so it's like a point and a little bit, a point and a half down or a point and a half up. Makes a big difference. The way that the weekly chart is looking, I think that rates are going to move a little bit higher, and that's really what's going to also scare the market. And I say a little bit higher. If I can go there right now, maybe I'll just do it here. So let's go TLT, 122. Yeah, then look at this. You see the 10-minute doesn't have anything on it. The daily has 129s, 129.59, 129.62 on the Lehman 20-year T-bond fund. But you see the resistance in those moving averages, and they're all negative, and the price is negative. And the 120-minute chart says I've got resistance at 122.72. I got resistance at 129.45. I got resistance at 130.18. I'm going to have a tough time breaking out. Says at 128.07, the left side support is key, and we're at 128.32. And everything looks like yields will pull back a little bit. I'm going to be watching this real closely. Now, stances. What are we doing? Well, I just wanted to show you something here, if I can find it. Yeah, so for my subscribers, I had a very comprehensive look at some of the gold sector, the Dow, a really intensive look. Let me just give you this, if I can just raise it up a little bit. There it is, and it's there. This is what I sent to subscribers about 8 days ago, maybe 10 days ago. We were looking at this and saying, this is the template I want to use. And the template says that thick red 20 moving average line has been a beautiful bellwether to give us a heads up or heads down on what's going on. And back in May of last year, it suddenly broke under the 9 EMA, the fourth and then the sixth or seventh sessions after the high. And that was it. Even though it ran above it, it was making lower lows and lower highs. That's what I'm thinking we've got now. Why? Because the high in November, the 3rd of November, is 17,977, just under the 18,000 level, essentially said, look for the same pattern. And it did. And we actually used this, if I remember correctly. And it came back down and it bounced. And I think I was a little late. And then we finally got the short. But what we were looking at is that 20 period moving average became a yo-yo with lower highs and lower lows, a sine wave movement, essentially channeling down. I said that that's what we're looking for here, which is one of the reasons why we went a little heavier short in our down position than usual. And what happened was at 18,167 on the 20th of April, made a top, and in the Chapman Wave methodology, let me just show you here, INDU, that turned out to be a peak recycling, notation, alternate count peak D. And peak D, when the stochastic and MACD are fading, says anything from DEF. When that happens and you're fading in the technicals, if there is a pullback under a key support level, now you're looking at something very different. So, yes, pullback. It's under the 9-period moving average. Got repelled today, right in the 17,868 area. Where's the resistance on the 9 EMA? Right, if I can click it correctly. All right, I'm not good. That can't be 17,827. No, maybe it was. All right. No, we went above it. Well, we hit that line and we can't pull back. Look at the weekly chart. The weekly chart is suggesting that in the W formation, that if there is more time and price involved in the pullback, this is going to change the W formation. But if there's just a quick jab to the downside, test 17,666.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So I forgot to put my earphone on. Wondered why it was so quiet. Wondered why I was getting through so much stuff. That's because I didn't get a single break. I just talked right through 2 breaks. So let me do a quick review. Here's the weekly chart that I showed my subscribers over the weekend. One of the many, many charts. And I showed the daily, peak D in the daily chart. And the technicals were very weak and the price was weak. That says to me, it's a very clear sign that the tide has changed. We are now going from a rising tide to a declining tide. Keep it simple. The weekly chart says you've established a leg C. You've established a peak C with last week's lower high bar. Now what we're looking at is the 70,562 level as key support. If we go down to 70,500, 70,300, that's kind of the area that I'm thinking if we take a little time, if we have nice bounces like this, Friday's rally off the lows, strong rally off the lows, we can use time and have a rotating correction. I'm still thinking rotating correction with a new high, sometime maybe this summer, a new all-time high that is. To go with the whole thing about, I did so much work over the weekend looking at this whole skyscraper thing, trying to say, where are we? Where are we? Boston had, I couldn't find it. I spent a bunch of time over the weekend and this morning and last night trying to find in the Boston Globe, I had thrown the paper away, the Boston Globe Thursday, I believe, or maybe it was the Friday edition, that had another skyscraper. This is not happening every month now. It's happening every week. They're talking about a new race for the tallest building in Boston. This is a 75-story building. I think that John Hancock's still taller. But what's really important is that I'm getting all the icons. I haven't yet got the icon in the automobile industry. It's getting close. That is not the automobile industry. I'm talking about style, where substance becomes less important and all the other peripherals, like it used to be the bumpers in 1969 or in 2000. Remember the Cadillac, the SUV was like it was basically a truck. It was so big, it was just out of all proportion to anything. So what we're looking at here is this the start of a major decline? When I say major decline, is this the top? And I don't believe it's the top yet. I can see other signs that I don't see anybody talking about, but I believe it's really important. That is the automating of, like a filter, when people who, especially with the 16,000 retirees a day now, or at least people turning 65, that makes the boomers and the retirees, it starts to extend it. And now they're starting to put these programs out. I hear these ads all over the show saying, did you survive, the last decline? Are you cautious? Are you? So that I think people are going to be pushed into the market in a certain way. And I've been talking about this for 5 years now. As someone in the den said, says, as you say, Basil, the most hated bull market. I just played tennis yesterday outdoors, first time. The season just opened. Nobody even mentioned the stock market. Not one person. The people that were playing there are the people that are generally always in the market, in one way or the other. I've never seen that. Last year was less than ever before. This year we started off with nobody. I think there's still room for this market to suddenly move up and grab people and say, hey, you haven't been in the market. Not only that, President Obama, he is totally responsible, of course it's his administration, for one of the greatest bull markets that we've had. Never takes credit for it. It's just not his oeuvre. It's just not what he likes to talk about. It's just, stock market. But actually, it's an incredible thing. Would you rather have the stock market right now at 6,000? Or would you rather have it at 18,000? So, President Obama's dinner speech was hilarious. I didn't actually hear. I just missed. I just missed it, but I did get some of it. He's really good at that. And then there are other things in the administration that you just shake your head and you say, "What are they thinking?" My wife's a physician. I speak to physicians all the time. I don't even want to tell you what the people are saying about what's going on in healthcare. If you want to stare at a computer, it's a fantastic medium, but don't stare at the patient, because you're going to have to spend your entire weekend catching up on all your charts that you have to do for for all the electronic data. And all they want in this administration is data. So we'll see what happens there. So good things, bad things. But the major thing that I'm looking at is what on earth could get the market to new highs? And if it goes to new highs, could we have an explosive move to the upside? How on earth could that happen under these circumstances, under the market? So anyway, I discussed this with daily, weekly, monthly, and in sum. I don't talk politics, anything in this section. This is purely technical. And it said that this pattern here, the Chapman wave potential stalk leg formation, leg, body, start the neck above 18,351. That's what we're going to be looking for. Are we short the market? Yes, we're short the market. I'm not unhappy about that at all. And then, of course, I have my overview and my market today, and that's these 5 quadrants over here. This is the 120-minute Dow, 120-minute VIX. I said that could be a peak G as we pull back today. I think that's happening, and they could give a little bit of a rest to the downside just for the moment before it kicks in again. This is the Richard Arms Trin Index. I use it a particular way, and this is your peak D in the Dow Daily and peak D in the S&P Daily. And then I give a whole precept on what's going on here. So there's a bunch of things. And, of course, the different charts. And I spent a little time on the, not a little, quite a bunch of time, actually, on this chart here. This is the gold chart. And I wrote up all about it. Leg E, and I showed the inside track resistance. Leg E showed the inside track resistance. And you've got a spectacular leg A up in the monthly. So I don't know if you're interested in my. We're long, short. We're long and we're short. We've got very low priced stocks or ETFs or ETNs, and we've got very high priced. So it's all over. And let's just take a look at the IBB, because I think the IBB is telling us a story. It's telling us a story of sector failure. And it's telling us a story that why, in essence, the NASDAQ and the QQQs aren't able to spiral higher and have got a lot of resistance. And I think it's because so many of these biotech stocks are involved that it's really putting a cap on the upside. That's why I'm saying we have to get a full rotation. But then you start to look at Alcoa. Look at this, peak E. Just a minor pullback. I think it's going to be a little deeper, but right now it's a peak E. Leg C in the weekly might take maybe a week or two, and then pop, it could go to the upside, because it could do that in the next hour. But the 1168 is strong resistance for Alcoa, the 200-period moving average in the weekly chart. And look at X, USX. Fabulous move. Look at this. Why is US Steel up 128 to 2040 right now? About to take out leg D for leg E. If this is a major bear market, you would not expect to see Alcoa and United Steel moving like this. Look at the Boeing. Boeing should be impacted by dollar and all sorts of things, by the favoritism of what's the what's the European airline, and not using Boeing. So, and yet it's holding very well at this particular point. We're going to look at these real closely, and we'll also look at some of the other ETFs. I wanted to show you W, which is, I wanted to show you soy. I'll be right back. Basil Chapman, Tiger Ignitions. I heard that break, and I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, I can't remember now if I actually showed this. I meant to show it. I know that I had it up. This is the 10-minute E-mini, and what's really important about it is it broke above the peak A. There's a question. I talked about in Larry's show. I said that this is a Chapman Wave Phantom A, and that means that even though this is technically C, I was not trading it at the time. If I was trading it, I would have got out of that position at C thinking, there's a possibility it's a Phantom D. And that's it, that if it pulls back and takes out the low that started the move of 2060.25, this is a 10-minute chart, that in fact it would be negated and a new high would start a new move up. Well, we've got a leg A, we've got a leg B. Will we make just a nominal C at about 2068.50, pull back, and then a little pop up, and then maybe tomorrow, later in the day, we start to the downside again, either that or Wednesday? That's kind of what I'm thinking. So the parameters to watch are at 2067.75, any 10-minute bar that closes underneath 2065 says, good chance. No, I'm sorry, 2064.50 would suggest that it's going to fail. My thinking is it's going to go higher above 20.69, 25 to 2069.50. That's what I'm thinking. That'll start leg C. And just nice little moves, a little slightly rising highs and rising lows. Okay, that's that. I had a question about, this is the New York Harbor blend stock, it's crude oil. Leg C in the weekly, 1.01, well, 1.6180. You go 1 penny above that. That'll continue leg C, but it will in the daily start leg D, and that's where you got to be careful. So we are really close, I think, in crude oil to some kind of a digestive thing. Now the question is, I'm going to get to a second part of this. So the question is, in crude oil itself, which is exactly the same chart pattern, what would be the downside support? I thought I did that, but I'll do it again. And my thinking here is that the 47.50s, maybe 48.20 pop, but within 80 cents of the 47.50 200 period exponential moving average, I think we should start to pull back. So crude oil could have a pullback. Now the question was, do I short it? Now I'm going to go to the next thing, which is the XOP. The XOP is, in fact, excuse me, the SPDR S&P Oil and Gas Exploration ETF. That's made a peak E, so it's a different notation. It's a little more mature. It's still a leg C in the weekly. And my thinking here is that I would, Bob, if you are really good at monitoring it, you're there all day and you're able to do it. My thinking is, where do I buy it? I don't know about the shorting of it, but that was your question. XOP, is it time to take a short in this sector? According to stats, May is supposed to be friendly for the dollar bulls, which may be bearish for commodities sector if U.S. dollar takes counter trend move up. Yeah, I don't disagree with you. I'm thinking it's more time than price. That's what I'm thinking. So if you were to short it, you might have to wait. I would like that leg D. The moment you get the leg D in crude oil, that would suggest that the XOP might not go as far up. It might stall. It's at 35.09, down 65 cents. It might only go to 36.03, 36.23, and then make a U shape, an arch formation that makes that lowercase h, and then break down. And if it goes under 34.40, under the 34.40s 200 period exponential moving average, the next level of support is 33.70 to 33.08. So the answer is, you could maybe nibble here. It's kind of tough. I mean, overnight, anything can happen with crude oil. I personally would wait a day. I might miss the best opportunity. I want to see if there's a leg D. That's all. And if there's a leg D, as it rolls over, I don't want to buy the strength. I want to buy the weakness as it rolls over. And that would be buying it to short, that is, to short it. So that's a question there. Now, as far as Julie's concerned, yep, it applies exactly to the RB, to the New York. Am I ever going to remember what it's called? RBM16 is called New York Harbor Blends. What an easy thing. New York Harbor Blends stock. NYHB. Yub. Okay, I got it. Okay, so that was the answer to your question. And I'm saying you could short it. Don't get heavily short. If you want to short it, you're shorting a trend, but it's a short-term trend. Really, it might move even quicker. That's why I'm just saying to you, you don't think that you shouldn't. I'm just saying, think that your objective is to short, but at some point you want to be buying. So it is more a shorter term, not an intermediate term position. It might turn out to be that way. That's why I'm saying it's okay to short, but I definitely would put a very tight stop. It's easier to go back in than to just sit there watching this thing spiral to the upside. Okay, that was that. And then there was a question. My Dow Quartet. I went through this over the weekend. I didn't show it to subscribers because we've been looking at it. See, GE is in a sideways move with a slightly lower high and slightly lower lows. I'm thinking here that the weekly is telling me that there's still strength, but it is going to be somewhat vulnerable. It's at 38.83, up 9 cents. If GE closes underneath 29, tell you right now, 29.79. So give it a little room. If it closes under 29.50, that's going to suggest to me that that's a timeout for both GE and the market. If it manages to keep going sideways here in this trading range between, call it 31.50 and 30.25, and it just keeps doing that and bounces in between that range, that's not going to say this market is going to rotate so that there are enough Dow stocks, at least for the Dow and S&P, to be able to rotate to keep this as a high-level consolidation rather than a breakdown. Okay, so let's just go to. I want to refresh that. Number one, and number two. Oh, there they are. All the questions coming in. The courts remain closed because it's raining till Tuesday. Just want you to know. I want to renew. Okay. I got it. I'm trying to type in. I'm trying to renew with my subscription with Tiger Dollars and always find the renewal page. Okay. I'm sure Leanna will do it. So I'll just answer your question for the, for renewal. If you've got the Tiger Dollars, you want to renew, TFNN will organize it in a second. So just we'll get you there. I'll be back as soon as I'm finished my show. Now, Berkshire Hathaway, I'm not even sure I did this because I did it intensely over the weekend. And I did it intensely earlier in Larry's show. So I'll try it again, just in case. Why is Berkshire Hathaway so important? It's important because it's everywhere. Berkshire Hathaway B shares trading 146.40, up 92 cents. I mean, he is in insurance. He's in oil. He's in IBM. He's just everywhere. He is the economy. And not only that, he's not the stocks. He's not one of the funds that's buying the stocks and ho-hum. He is the guy that says, what's our balance sheet? What are we buying? What are we selling? He is in charge of the businesses. He's overseeing them, obviously, at this age. But the real business is, it's not like stocks, it's not like a piece of paper. It's not like tomorrow you can say, oops, I'm selling IBM. Maybe in IBM's case is a little different. So we've got a break coming up, and Al's reminding me, he can tell that when I get a little carried away, then I'll forget to look at my IMs. The Dow is up 62, S&P is up 641, a bounce within a lower lows, lower highs, downtrend. I'll be right back. So Berkshire Hathaway is acting very well. We're going to watch this one closely. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I was just looking at the ad a moment ago. First of all, stay tuned for your swimming lesson coming up. Fabulous lessons. But the Art of Timing the Trade that Dave White worked on using Tom O'Brien's techniques, just scanning last week and over the weekend. It's really it's really good. I mean, Dave did a fantastic job on that. And just it helps you identify certain areas, certain stocks that could be moving up or down. So a question of the den, do I agree with that 170 is the target on Berkshire Hathaway? I'm going to suggest this 152.94 is the cup formation that would be my upside target. As long as we break above, if it's this week, it's even more exciting, above 148.03, that would say to me that the buy mode in the weekly chart is so powerful that consolidations are going to be high level. 143 to 142 would be major support. That's 4 points down, not a big deal. But at this particular point, I love what's going on. If it breaks 152.94, I could renotate that as a new leg D. It would be so unusual. But if it's a new leg A, Berkshire Hathaway would go all of next year to D, C, B, C, and D. So I have to rethink this. I have to consider that it is a possibility that we've recycled because the pullback from peak G didn't take out the low of 108.12 where it started in February. And that makes us an active alternate count brand new A or D, D/A. So I love what's going on. The week has just begun. I can only tell you, I am expecting that even Berkshire Hathaway will be doing some digesting. So now, that's the question. So where would I think it would go to? If by June, the third week of June, if Berkshire Hathaway, instead of being at 138, is actually at 155 or higher, I agree. We'd be looking at the 165 to 178. But you can only do one step at a time, especially with a big multi-sector stock like a Berkshire Hathaway, which is the umbrella for all these other major companies. So that's what I wanted to say. Question about the XLF. Yeah, I'm looking at the XLF because we have a bank stock and it's holding quite nicely, to tell you the truth. And I have to make a decision today or tomorrow. Are we going to just raise the stop and be taken out? Or do I want to think of it as not raising the stop, but adding to? My bias right now is to want to add to the XLF type stocks that are acting well. That's the financials. I don't want to be early. I don't want to be late. We only just turned down. It could still be a week or two or more of a pullback. So that's the way I'm leaving it right now. XLF is acting really well. I think it will go to a D, about 23.77. How long does it have to pull back before it does it? It's at 23.50. 23.50 to 23.78, not a big deal. We could do that in a blink of an eye. So I like it. That was the answer there. EEM is another question. Wait, XLF? XLF. Oh, and Travelers, I'd like to do that. So I've got a peak F in the EM. You know, it's not my favorite, but it has acted well. I'll put it together with the EWJ, which is the Japan index. And at this particular point, my thinking is that it needs a little time. That's the emerging market ETF. It's got a peak D in the weekly. Would I buy it? Would I sell it? I would do nothing right now. I'd wait for it to pull back at 34.25. I want to see how it handles the mid to low 33s. If it handles it very well, I'd be inclined to say, yep, now you can go in for the next leg to the upside on the weekly. If you're holding it, I would say just hold it. I put a stop in. 33.50, I'd say be a little careful, but that might be where you want to get in. Nothing for now. I'll look at it again in maybe 2 days' time. Next question. Oh, there's the break. One quick one was Travelers, TRV. Then I'll do that tomorrow because it was a very good stock. TRV. Yeah, the EWJ is the same thing. Let it pull back. Travelers acting very well today, but no, it's Travelers I think has a bit of a problem. I'd be careful with Travelers. Hey, folks, stay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.